Hey everyone, welcome back to Corporate Decoder. Ever feel like corporate reports are written in code? Well, today we are going to crack that code as we review a 10K filing for 10 Holdings, a company that specializes in event planning, production, and broadcasting services. Think of them as the behind-the-scenes wizards making events happen both in the real world and online. But here's a hint. Their journey isn't just about throwing great parties. It is more like trying to host a party when half of your guests forgot to RSV and your wallet is suspiciously light. Let's get into it. This is their annual report, a detailed look at how they performed over the last year. So let's dig in and see what's what. This report covers the year ending December 31, 2024. So it's a look back at the last 12 months of their business. Right off the bat, the report sounds an alarm. Their auditor has expressed substantial doubt about 10 Holdings' ability to continue. What does that even mean? Simply put, it means there's a big question mark over whether the company can stay afloat in the long term. This is because they had a net loss of about $3 million this past year, and they owe more than they have on hand. One of the key risks they highlight is the potential decline in demand for their services or platform. Remember, they make money from virtual and hybrid events. If fewer people need these services, their business takes a hit. This market depends on the overall adoption of live engagement technologies. Another risk, the experience of their customers relies on how well their platform called Zvid Pro works with other technologies they don't control. If their platform doesn't play nice with others, it could hurt their business. Think of it like your phone not being able to connect to certain Wi-Fi networks. Here's a technical one. Interruptions in their services caused by undetected errors, failures, or bugs in their platform could really mess things up. If the platform goes down during a major virtual event, that's not just embarrassing, that can cost them customers and money. The event planning market is a crowded space, so their competition is intense. They are up against big names like Zoom and other platforms. If they don't compete effectively, their operating results will suffer, and competition isn't just about offering the best product, it is also a price war. Here is a big one. Their biggest customer accounts for over 60% of their revenue. If that customer leaves or reduces their business, 10 Holdings would feel the pain. This kind of reliance on a single client is risky, like putting all your eggs in one basket. Moving on, interruptions, delays, or outages in service from the data centers they use could impair their operations, which may harm our business. The company plans to use artificial intelligence in some of their products, which may present operational and reputational risks. Let's switch gears. They own property. Their headquarters is in Pennsylvania with a long-term lease, and they rent office space in California. Switching to what matters to investors, their common stock, which trades as XLD, commenced trading on the Nasdaq Stock Exchange on February 13, 2025. This is relatively new, but we also discovered they don't pay dividends and might not plan to do it anytime soon. Digging a little deeper, we see they sold stock in the past without registering it with the SEC. That included stock sales to Spirit Advisors as payments for professional services rendered. This section gives us the management's view of the financials, and what they found is important. For the year, their total revenue decreased by about 6% down to about $3.5 million. This decrease was mainly because of certain 2023 events that did not repeat in 2024. But interestingly, revenue from physical events jumped nearly 50%, but remember that overall the revenue went down. The administrative expenses increased by about 14%, now at $5.4 million. This was due to accounting and legal fees related to becoming a public company and also increased personnel costs. As a result of all of the factors, the company net loss got worse and was about $3 million compared to $1.7 million a year before. Here we look at where the money is actually moving. The net cash used in operating activities also increased significantly, going from about $265,000 to about $2.5 million. This just highlights the challenges the company is facing in generating cash. To help offset the cash burn from operations, the company increased loans from related parties. That's what kept them afloat. The total obligations are about $6.3 million, and most of it is short-term. That is due within a year. Let's look at the executive compensation, or who gets paid what part. Eka Randolph, Wilson Jones Thor, the CEO, got paid more than $4 million, and John Oro Bono, the CFO, made almost from stock options. Now we look at who owns the company, and the owner is V-Cube Inc., which controls about 80% of the company. The company has a code of conduct and policies to prevent insider trading, making sure everyone plays by the rules. To have an independent board is good for the company and shareholders. There are many rules about that the company must follow. It has determined that 2 of its current 5 directors satisfy the independence requirements of NASDAQ. Now let's check the auditor, which are the people that check the books, their fees. The audit fees for the year were about $36,000. The company only has 2 operating subsidiaries. That's it for this report. Now, let's put all of this together. 10 Holdings definitely has some hurdles to clear. Their high dependence on a single customer is a major vulnerability, and the financials are really negative and need some serious love with cash. There's an opportunity if they can truly innovate their platform with AI and adapt to the changing market, they might just pull through. However, the competition is fierce and they need to execute their strategies flawlessly and quickly. If it does not work out, and the company might be in trouble because the auditors are already raising concerns, and that alone can scare investors away. Okay, corporate code crackers, it's your turn. Leave your comments, hit the like button, and subscribe for more corporate decoder videos.